everyone, this is Patrick from EasyFX Code Trading System, and it's Saturday, the 21st of May, 2022, and this is the weekly technical analysis for spot gold and dollar yen for the 4th week of May. And let's begin with spot gold, where after a hammer-like candle that was right on the start of the week, it managed to bounce off the round figure of 1800, and we managed to continue its recovery all the way to hit the 1850 on Thursday, and consolidated and stayed neutral for the end of the week to close near that level as well. So it has managed to recover back up above the 1800 and stayed close to the 1850 for the week, at the expense of the US dollar index, which had retraced lower. Let's note this for now. So the 1800 round figure is going to be a strong support level now. And I think we can move this up a bit higher as well to this swing low level at the 1790. So it has managed to find support above that support. And now the interim resistance is at 1850 and just below the daily 200 EMA as well. And above that at the 1900, along with the FIB. Along with the 62 FIB or of this retrace lower. Okay. So we'll see if it's able to recover further above the daily 200, or whether it's just going to consolidate within this this zone between the 1800 and the 1850. And it will also depend on how the US dollar price index behave as well for next week. Right, this was after a couple of slightly lower than expected retail sales figures on the Tuesday, and then the lower Philly Fed manufacturing index figure as well on Thursday, which allowed the major pairs and as well as spot gold to take advantage and recover back higher. So we'll have to see what the US dollar index movement was, and understand that whether the inverse correlation was in play. But for now, looks like it has hit a temporary resistance. Take quite a bit more bullish momentum to break through higher to retest the next resistance levels. All right, and this coming week there's a lot of US news that may help to trigger some movement, and for most of the week, almost every day. Okay, but the key ones to watch out for will likely be the price index on Friday, which is related to the inflation figures. But likely before that, there could be movement to resolve where the US dollar is going to move to in relation to the other pairs. Okay, so let's move on to take a look at the US dollar index, the DXY. This is the DXY, the US dollar index. And right from the start of the week, it has weakened and retraced lower after nearly hitting the 105 at the end of the previous week. But from the start of the week, it has retreated lower and break down on on Tuesday below the 104 and pull back on Wednesday before a further continuation move on the Thursday. So these were due to lower than expected retail sales and fully fed manufacturing index figures. Finally, just consolidating and pause on the Friday. But right into this support zone now. With the 162 FIB extension area with this swing low. So this area now at the 104 is going to be a resistance zone. And of course, along with the 105 above that, that's a significant resistance. So we'll see if this level at a 102, 40, around 45 area can hold. And above the 102, which is, of course, will be the next key support level. So we'll see if it's going to be a consolidation in this area, or whether it's able to dip down lower to test 102, or maybe even down to the 138 FIB. If it's able to break out higher again, then it's likely going to target the 105 again. So we'll see if it's just going to be consolidation for this coming week, with not too many major news for the US as well as the other economies. All right. Okay, let's move back to the other major pairs. Let's move on to take a look at the US dollar against the Japanese yen, where it has followed through with a bit more weakness from the previous week, from the end of the previous week, after dipping below to retest the 162 FIB. It did dip lower on the Thursday to retest the round figure at 127.00. That's the support zone here that we had highlighted after a bearish Wednesday. So it was not able to recover back higher above the 130 round figure. So fell hard on the Wednesday back below the 129. So we'll mark this as a intermediate resistance now. And above that, that's significant resistance still. At the 131. So it has dipped lower to retest this swing low area. It's the support level. Now we'll see if there's further weakness, whether it's going to dip lower to this swing, likely a swing high area, and the back to 125, where the daily 55 and the swing high up here at the 100 is. Okay, let me mark this clearer here. Should be at the 0, 1, 2. Okay, 50 here. And let's take a look where the okay, there is a swing high level here. That was from the highs of 2015 of 7 years ago. So we'll see if it's going to dip lower to retest that as support. This is the, let's take a look at the weekly time frame, and it has 2 bearish weeks now after hitting the 131 as a double top here. So we'll see if there's going to be one more move lower into this previous swing high, and let's see whether it's able to find some support. Add one more level here. That's a significant support, and mark this as a interim support now. Okay. So this goes down to 125, 80 level. And we'll see if this is forming a slightly bearish channel. It's maybe too early to tell yet. So we'll need another week to see whether there's some consolidation within this zone. All right. So do check out my other videos on the other major pairs, and have a safe week and a good trading week, and cheers for now.